break. It's earnings season. We've been talking to managements across the board. Hear out a view from the management of Godrej Properties. They had a slightly weakish first quarter. Here are some key takeaways. We'll be back in a moment.
Last year, we were able to do over 1,000 crore each quarter. We would like to demonstrate that as an ongoing minimum criteria that we deliver, but it will depend a little bit on our ability to get launches done within quarters. I think one of the big reasons we slipped under that 1,000 crore mark this quarter was that some of the launches we hope to do in Q1 have slipped out due to approvals not coming on time. So we remain confident of having a very strong year ahead.
How big has it changed, the migration to India has been? Because we'll see other real estate developers also having to do this. How much volatility does it add to your earnings, and would you suggest that we look at important metrics like booking value over your P&L strictly?
I think there will be a lot of volatility and this lag effect. That said, I don't think there is any change to the underlying cash flows of projects. So there's no change, we think, to the ultimate profits recognized in a project, to the net present value of the cash flows generated from the project, and therefore no change called for in the strategy of the company in any way.
What's your outlook on demand going forward now? We know it's a sentimental thing, but we've seen major roadblocks like RERA, GST, etc. To some extent, they help solidify your position because we saw consolidation. Do you expect to see strong demand for your products going forward in this year?
The negativity surrounding the sector is very typical of a cyclical industry that is going through a downturn. But at the same time, I think good times will come back to the sector as well. It is, both in India and globally, a very cyclical sector. We've had now 5 or 6 years of downturn. Real estate is more affordable now than it's been at any point in the last 15 years due to interest rates being at almost their lowest level, although there's been a little bit of hardening in the last 3 months, of incomes having risen quite considerably over the last 5 years while property prices have been stagnant. So all of that, we think, lends itself well to the next leg of recovery, which we do expect to see sometime in the next couple of years, certainly.